right, traders, welcome back to Learn to Trade, and this week's webinar is going to be a great one because today is election day in the United States. Now, before we go any further, there's a couple of things that you need to understand about this election day. This is going to be an extremely volatile day for U.S. equities and the U.S. dollar. Why? Yes, because it's election day in the United States, but not only that, because there's a lot of things going on today. For example, um, mail-in ballot because of the pandemic. Okay, so absentee ballot count is extremely important for this election results, right? And it will be like no other election because we are not going to get the result of the election today by the end of the U.S. closing day, right? Or by the end of the vote centers closing. We are not going to get that today. Why? Because there has been a big surge in absentee ballots sent in. That's people voting by mail. Why? Because of the coronavirus pandemic. And the thing about this is that President Trump already said that if by day's end he is really ahead in the counting or in the votes, he will declare victory and he will go with his lawyers into the courts to try to stop absentee ballot counts, right? And that is a big deal. Why? Because most of the Democrats' votes are going to be sent in by mail. So there's a big chance that President Trump is going to be ahead on the votes um, by the end of the day today, right? But that doesn't mean that he's going to be elected president because there will be a big part of the votes that haven't been counted just yet. For example, just in Texas, the amount of votes mailed in has surpassed already the total of the votes that were counted in the 2016 election. So that's the main reason that we are going to get volatile reactions in the market because of that and because of the range of the news that algorithms are going to be reacting to. So the I mean the most common advice here is to stay flat. I mean, if you are just starting with your trading, I would recommend that you stay flat. And if you're not confident in your trading, right? And if you are not confident in your risk management or in your trading psychology, just stay flat. But look at the charts, have a blast, and just by looking at the reaction on the charts, whilst you look at whilst you look at the actual news, right? Make this an educational day. Let's start with with this week's webinar because it's going to get interesting, right? So we are looking right now at the U.S. dollar, right? This is the U.S. dollar currency index, the DXY. The DXY is the benchmark to gauge the moves on the U.S. dollar. Okay. So what we're looking at, I mean, I always look at the DXY. Why? Because when I make plays on the US dollar, they're based on the DXY. I don't trade the DXY per se because, because when I want to make a play on the US dollar, well, I look at the DXY. For example, here, when the DXY was trading at this price level and it broke with the orange structure and it turned and retested the 93.35 level and started to rally, well, I bought US dollars against the US dollar, Canadian dollar, against the Singapore dollar, and against the Japanese yen, and that's how I play my US dollar plays, right? But in any case, this is the DXY, and let's look at some current levels. I'm sorry about that. So the DXY clearly rejected the 94 to 94.20 level. this big base right here, previous base, but we are not in a reversal mode just yet because we are still making higher highs and higher lows, right? We are still making higher highs and higher lows, which means that we are still in an immediate bullish structured market, all right? Even and of course because we have, well, I mean, we broke with the previous bearish structure, okay? And I mean, if we look at this as a bearish flag, the calculated targets on these are way, way, way up there. So, I mean, to see the calculated target, we should go to the 12-hour charts, right? The calculated targets on this bullish breakout are right here on these lows, key levels, all right, at around the 96 level. So, wow, we are very, very far away from what could be that calculated target on this flag breakout, if it's in fact a bear flag. And to be completely honest, I am expecting a bullish reaction on the election results. But again, it's going to get volatile, and I'm going to show you everything in this webinar. So please, I mean, if you really want to know what I think is, I mean, my plausible scenarios are, just watch the whole damn thing, right? Let's go back to our chart and let's have a look at this. I need to start looking at. I do have some positions going on, but that's fine. So what I'm looking here for today is maybe a retest of the 9360 level, to see where we are standing with this with the DXY. The thing about the DXY here, people, is that if we break with I'm sorry, with this exact level right here, this zone that I have highlighted, well, we could be in the, I mean, if we break with this level, we could be in fact returning to a bearish market for the US dollar. All right, now the thing about this, I am a US dollar bear. I am a US dollar bear, fundamentally speaking. But again, why? Because of the insane amount of quantitative easing this round has had, right? The more liquidity there is in the market, the less valuable that currency becomes. Why? Because the more dollars are in circulation, the less valuable $1 is. And I mean, you need to think about these markets as commodities, okay? In the sense that the more of a currency there is in circulation, of course, the less valuable one unit of that currency in your hand is going to be. That's why the DXY devaluates over time when there is quantitative easing. For example, if you look at the 4-hour chart, when we started this round of quantitative easing back in March, was it in March, September, August, after, well, the pandemic and everything, right? We were trading at these levels, around these levels in May. And yeah, just look at this move to the downside. I mean, what I'm telling you is not, it's it's not a lie. I don't know how else to put it. All right, so yeah, I am fundamentally speaking a US dollar bear, and yeah, the FTSE. A US dollar. I am fundamentally speaking a US dollar bear, and the thing about this is that, but I mean, I don't mind playing a bullish play on the short term. If I see that the US dollar is strengthening in the short term, I am going to be buying US dollars, right? Even though I am fundamentally speaking a bear in this market, I trade whatever opportunity I see fit to trade. All right. So having said that, let's go and let's see what happened in the last election on the United States, which was in November 8th, 2016. So here we go. This is the 4-hour chart of November 8, 2016. And what happened is that we got a big flush in the US dollar, and then buyers came into the market at a key level. This always happens. It's always at a key level, right? I mean, panic sell-off on the US dollar, and then buyers were picked up here at a key level. And we got that big rally in the US dollar, right? So let's calculate this big rally in the US dollar from low to high. the immediate rally, right? From low to high, that was in 41. So the first 41 days after the election, we got an 8% rally in the US dollar. So that is something that you need to consider, right? For this election, too. We might get a flush in the US dollar pre election and then a rally after the election is over. But we kind of expect a US dollar bear day. It depends, right? We are early in European trading at the time of this recording. So what we're going to do is just we're going to wait and see what happens, right? I mean, there's nothing else to it but to wait and see, to be patient, and how the US dollar reacts to this level, which is the 93.60. Okay, the 93.60 level, to see if we get a surge in bullishness or a breakout retest and a bearish continuation. We don't know what's going to happen. No one knows this, right? But you have to be prepared and do your own analysis. All right. So let's start with the FTSE. Well, I do have a long position in the FTSE. Do not chase this trade. This trade is far, far, far gone. But I just wanted to show you what you guys are missing out. Cool. So we are going to look only at US dollar equity. US dollar equity. We're only going to be looking at US dollar. I'm sorry, at American equity, US equities, and in this webinar because it's a US election day, right? And right now, just to make sure. Because of the US dollar, not crashing, but but dipping, that we are seeing a surge in metals at the moment. All right, so heads up to that. Yep. So let's continue. Let's continue, and let's start with the. And I'm going to delete all drawings on all charts. All right, because we're going to do this together. This is the fun part of this week's webinar. All right, so remove drawings on all of my charts. We're going to look at the Dow, the Nasdaq, the S&P 500, and the Russell 2000, which are the four main U.S. Indices, right? And on the last couple of days, we've had a meltdown in U.S. indices, okay? This is due for a couple of reasons, okay? So the number one reason is liquidity. What has been holding this market up? Liquidity, okay? This market has been held up by liquidity. What does that mean? Let's go to a daily chart. All right. After the coronavirus melt off, right, central banks, and I'm not talking only about the U.S. Federal Reserve, I'm talking about major central banks around the globe, they started to print insane amount of money to support or to stop markets or global markets and global economies from melting, right? Why? Why do they do this? And how do they do this? Well, that's easy. They lower interest rates close to zero, so that it's cheaper for businesses to borrow money, or actually free for business to borrow money, and they buy treasuries from commercial banks, right? So they increase their balance sheet by doing that. Why do they do that? Because the more treasuries they buy, treasuries are government debt, right? That banks hold, commercial banks hold. And the central banks, what they do in rounds of quantitative easing is that they buy their own debt, their own government debt from commercial banks, and they keep it, right? So by doing that, they inject liquidity into the economy. They cannot just print new money because that has a tremendous inflationary reaction to it. It would have, right? So what they do is that they buy treasuries from commercial banks to inject liquidity into the market, And so commercial banks can use this liquidity for loans, right? And it's a waterfall effect that eventually would get to your pocket, right? Even if you don't feel that. Okay, so that's how quantitative easing works in layman terms, right? So let's talk about the Dow. The Dow has been the past couple of days we've seen a big stop and reverse at a previous key level around the 2630. No, that's it. I'm sorry, 26,300 or so, right here. Okay, a stop and reverse in U.S. equities. Now, it is my advice not to buy U.S. equities. Okay, please do not buy U.S. equities pre-U.S. elections and more so these elections. Why? Because I'll show you. I'm going to show you what happened with the Dow on the previous election. Okay. Why don't we do that just now? Let's go to November 8th, 2016. What happened with the Dow? Right? What happened with the Dow is that we got that crash during the election to another, again, key levels matter in equities. Right here, just to pick up buyers and turn. And we're talking that we're at the 17,500 level, right? So let's zoom in and let's look at that first rally in the Dow. That's why I think that there's going to be big opportunities here in U.S. equities, because the first year, 448 days. We're talking about 448 days. So the first 448 days were such a rally in U.S. equities. We're talking about a 43% rally in 448 days, right? And then we chopped around, but that doesn't matter. I mean, the expected reaction again should be a flush to a key level, and then prepare yourself with that buy trigger. Let's delete this level because it's no longer in play, of course. And let's go back to this. So this might not be the key level that we're talking about. We are early in European trading, like I told you a couple of minutes ago. We still need to see what pre-market, pre-New York session and the New York Open brings into play. But let's go back again and let's calculate that flush, right? That daily flush. From high to low, this candle was about what? About 6.5%. So extremely volatile day. Extremely volatile day. This daily candle, if we assume that this daily candle is the high of the day, and we calculate let's call it a 6.5%. I mean, we could be dipping into 25. Into this lows territory, 25,500 level or so, if we assume that this is the high of the day, right? If equities continue to rally, we might again see a flush to these previous lows where I would be a buyer. But again, this is not investment advice. I'm not telling you to do anything, to buy or sell any financial product. This is only for educational purposes only. So that's the Dow, right? Let's talk about the Nasdaq. I mean, the Nasdaq is one of my preferred markets when it comes to U.S. equities to trade, just because the Nasdaq has a mind of its own, and it has been. I mean, it's the strongest of all four major U.S. indices. Okay, right now, I mean, the buy play on the Nasdaq has been really hard from its highs on October 13th. We have decreased around 10%. But again, we are at a key level. The level on the Nasdaq that I am looking forward for later today's plays is this lows. The 10,700 level would be my preferred level to buy the Nasdaq on a dip. On a dip. Why I'm apologizing if I'm using the correct word. So a dip to this level would quickly activate buys, in my opinion. Remember that this is going to be very volatile, so stay safe, trade safe, and if you're not consistently profitable or a long-time trader like myself, please just stay out of the market. Don't trade at all today. Just watch it, enjoy the show, and just prepare yourself for next year for next election, right? Like I did. So the Nasdaq would be around the 10,700. Let's go again to the past election day to see what happened. Last available bar. Well, this Nasdaq chart does not have historic. Uh, does not have historic um, price action. All right, so let's see if this one does. I just want to see what happened. All right, so this is the day of the election. I mean, I don't think that this is the day of the election. I think this one is wrong. I'm sorry, I'm not gonna be able to show you the uh, the Nasdaq or well, maybe if I go into futures and Q. Oh, let's have a look at futures. If I choose the continuous contract, I don't think it's going to go all the way there, but let's have a look. Oh yeah, it does. So this is what happened on the 8th, right here. Oh, wow. So the Nasdaq, this is a 2-hour chart. So this is what's fun about this. This is a 2-hour chart. So the Nasdaq crashed about 5.8% before completely erasing those losses within hours, right? Well, within hours. It's a 2-hour chart, so let's call it within a day or so. So yeah, within a day, it had completely erased those gains. So if we go right here to the actual chart that we were looking at, we call it a 6% crash, and if we assume that these are the daily highs, that would be a 4.3%. So if we actually get a rally throughout the European session, maybe to retest these lows right here. If we get a rally, we might get, I mean, if we get a rally towards the 11,300 level, I'm sorry, we might get that 5.85% dip to that buy zone on the Nasdaq. So heads up to that. This is going to be great. And I'm going to go back to my Nasdaq US 100 CFD chart. Right. So that's the level to look for. Again, I won't be playing anything other than a dip to these levels today. I won't be playing a breakout to the upside. I won't be holding any U.S. equities throughout. Let me just close a little bit of these FTSE longs. Yeah, that's good enough. I'll close this. I'll just wait for it. I just wait for it for 1 minute. So I won't be holding any position on U.S. equities. Maybe not even the U.S. dollar throughout the election day. I don't think I will. But I will definitely be trading the election, right? I will definitely be trading the election, and the only play that I want that I see is a dip buy in U.S. equities, and that's what we're talking about right now. So let's move on to the U.S. The S&P 500. We're going to finish off this week's webinar with the Russell with the Russell 2000. Right. So let's see the current levels on the S&P 500. Yeah, I'm gonna close that partially. That FTSE long. I'm pretty happy about that. I made 1,300 pips on that FTSE long. First target got hit. Wow, that was a big bear trap in crude, right? So yeah, I mean, I remember now. This is the level that I'm talking about on the S&P 500. Right here, the 3200 level is the level that I want to buy the S&P 500 at, and nothing else. This is the only level that I want to buy the S&P 500 at, and nothing else. All right. Now let's go back in historic price action and let's have a look at what happened. Last bar available. Damn it, I have to do it again on the futures. So let's have it at the E-mini S&P 500. So this is the SES on futures, the E-mini S&P 500 futures on the continuous contract, of course. Just to have a look at the at the historic price action on the here we go. This is what happened with the E-mini S&P 500 that day, right? From high to low, we got a what? A 5.88% drop. So we saw drops for about 5.8 to 6.3% in all major U.S. equities, but but all of these losses were on the S&P 500, all of these losses were raised within 16 hours, right? So that's what makes this a great opportunity, right? So that's the election. That's why this election is so important, okay? And if we go back, let's go back to my US 500 chart on CFDs. Actually, I'm going to do this on futures. No, I'm going to do this on CFDs because that's what we trade. All right, so the level that I'm looking for a dip on the S&P 500 is the 3200 level. All right, and that, if we assume that this is the today's low highs, that's only a 4.16% move down. So that's quite not. That wouldn't be a buy plate for me. But if we assume that the S&P 500 is going to rally today on European and New York trade, right, to at least the 3378 level, this is more likely because this is a 5.31% drop on the S&P 500. So the higher it rallies, so eventually the higher equities rally, the best is for my levels, for my buy levels. Why? Because because of if we looked at this with percentages, right? From the current market price, we are only 4.27% away from my key level, which is the 3200. So the higher equities rally, the better it is for my level to hold on a dip, because the farther away we will be from it. Okay. Again, this is what I'm going to be playing in this election day. Nothing more, nothing else. I am not looking to take any trades right now. I am holding just one silver trade and one FTSE trade, and I had a US dollar Canadian dollar position that didn't get triggered. That's why I use buy and sell stops. Right now I'm going to delete those. Boom, boom, as you heard. So thank you for joining me, and remember, stay safe, trade safe, and I'll see you guys in the group if you are part of it. If you're not, there's a link below this video. Goodbye.